What's up, my prophets? How you all doing today? It's your boy Cali. Just running through a quick little video. I want to do a video on trading habits and a pattern I've seen or have done over the years. A couple problems that I'm spotting some people doing or that I've done before, and hopefully my advice helps you guys out a little. Been trading for a little over a decade, so have a little bit of experience. Traded in the forex market, stock markets, commodity markets, and every market's different. Now I'm in the crypto market, and um, experience does help, but every market's different. So I'm still learning, just like you guys are. Haven't been in it too long, but enough where I'm catching swings now and getting the fundamental of some trades. So I'm just gonna basically just run through some trading habits that I think we need to break or correct. The biggest habit that I see people doing is buying on breakouts. So by the time you buy in, you're probably already out of the trade. So this is OMG versus Bitcoin, and this is just naked price candlestick chart. So based on this, you could read a lot of stuff into it once you learn the basics of how to read charts. I could tell you some of the trend reversals without having some indicators. All I have here is volume, and that's it. But based on simple support and resistance, we could do some analysis, right? So we're going to just plot some support and resistance lines. So I'm just coming in here and going to plot some lines down and try to explain what I see people doing or what I used to do as far as trading. So somewhere along there. And I mean, that's kind of the thing about learning how to set these lines up is, half the battle. If you're using Coinigy, if you hold shift, it makes straight lines, just in case you're interested. Little tip. So see, I can go up or down, but it won't let me move. It's just gonna run a straight line. So this is your basic naked price chart. And the first thing, like I said, people are doing is buying into a breakout. So people see OMG and they're like, oh, it's up, and you kind of wait on it, and then you finally get in somewhere around here, and you sit on it, and you're at freaking nirvana here when it hits a crazy high, right? And you're like, man, I'm rich. And then you get this big downslope. And what happens is, most of us, you believe in the coin or not, I mean, you sit there and you take these losses. If you believe in the coin, now's the time to cost average. If you don't believe in your trading, you should have been out and ran away from this coin a long time ago. But most of us don't do that. You're trading blindly, so your risk to reward ratio is non-existent. You're just trying to make an existing amount that you have in your mind, whether it be percentage or a dollar amount, and you're just running without actually having targets, and that's a big mistake. So a big thing is setting risk to reward ratios that make sense. 1-to-1 ratio does not make sense. If you're willing to lose $1, you have to put that into perspective. If I'm willing to lose $1 here, I have to make, possibly at the lowest for me, is $3 to $4 to try to make the trade work. If the trade ratio is not there, it's not a trade for myself. Some people like to live life a little riskier, and that's fine. If I see here on the day chart, so we're looking at a day chart right now, and most people don't trade or don't want to trade a day. They want to be in and out within 48 hours. I'm thinking cryptocurrency. We're looking at this. So I set up this line here, so it hits here a couple times, 1, 2, and then it hits here 1, almost 2. So I'm gonna say this is a support that we're finding right now. So what we need to do is look for the last support or the last resistance. Actually, I'll do it on top. And it's gonna be up right there for me. So this is the last support level that we have. So if it does drop down, this is how far you're willing to let it drop down. So that's your risk. So that means your reward ratio should be twice as big. So if I'm here, this is my risk. That means I need to be twice as long, right? So if I'm here, this is where we're at right now. I need to be about there to make this trade worth it. Now, the problem I have is we come up to a resistance line up here. We hit the resistance a couple times up here. So possibly it could be this is your drop, right? So this is your actual risk and this is your reward, and it's just about 1 to 1. But if you look at this trend, your risk is like 2 to 1. So you're actually willing to risk more than you're willing to make, which is not a good trade. So we have to dive in a little deeper and actually find something on a different time frame that might work for us. So like I said, don't buy a breakout. You have to buy. You want to make money, you buy into weakness and you sell on the breakout. You need to lock in profits. In trading, that's what it's all about. Capital preservation and adding to your capital. Don't put all your eggs in one basket. If you're putting all your money on this one trade on OMG, you have $1,000 and you're putting all your money and you're doing a 2 to 1 ratio where you're willing to lose $2 and make $1, it sounds kind of dumb when you say it out loud, right? So we need to learn the proper way to assess risk to reward ratios. You need to stop cutting your losses too early, because we'll start putting stop losses here, and you're gonna trade out. If it bounces down and you're right under the last support and you got traded out, and they'll come to right here and then it goes up, you lost a good trade. If you're down here and then you come up, but you traded out here and you're like, oh man, I was right. But so you have to learn how to read a chart somewhat before you start making these moves, because you're trying to just go into something blindly. Educate yourself a little. Start paper trading. If you want to be in the crypto market but don't want to put in too much money, go with the big coins, Ethereum, Litecoin, top 10 coin, and just park your money there and let some kind of interest occur, or some money making occur there. And when you're willing to start trading or ready to start trading, you're still in the crypto world, and because you do have money in there, you're going to start getting a little bit more familiar with the swings of the market. Real important, if you're going to trade, when does China's market open, when does London's market open, when does the US stock market open, and these are all time frames that we need to learn in the currency market. So I think that's going to be it. Entry, exit points. So I'll just run through them real quick. So buying on breakouts. Don't buy on breakouts. If you want to make money, you have to buy on sell-offs. That's when you're going to make all your money. Secondly, don't cut your losses too early. Set enough of a margin where you're not going to get traded out of your position before you let your trade realize. Thirdly, don't put all your eggs in one basket. Diversify some of your coins. Stick to 4 or 5 coins in the beginning, or whatever you feel comfortable, but you have to keep track of all your coins. The next thing is set targets. You're gonna be going, if you have to say, okay, I'm gonna trade out at 6,000, I want to trade out at 14, and Your profit taking's a little bit different. You can kind of mess with it, but you should never ever move your stop loss. If that's the stop loss you chose, is for a reason before your emotions got attached. Now your emotions are attached, thinking it's going to come back or bounce up, and that's when you're going to make bad trades. So don't let your emotions get in the way. Set your stop losses, get in and get out. Your entry points are always good to have before, and have your exit points before you get into a trade. The other thing that's going to be really important, and I think more than anything, is don't let your emotions run the trade. When you're high, and you feel like this stock is going to keep running, don't be scared to start taking your profits. If you think it's going to keep running, lock in some profits, whether it be 25% of your trade, 40% of your trade, whatever it is, and lock in some profits. So when it comes back down, you still locked in more profits than not. If I'm in a profit here and it starts running up and I'm here and I think it's going to keep running up, this might be a good time for me to take 50%. So I let it run up, and I think it's going to hit here, and it doesn't. It starts coming down, and I'm here. I have the choice. Do I want to wait to see if it's going to bounce back, or am I going to just take my gains, right? If I would have gone here, I'm like, okay, well, I made a 25% profit on 50% of it, so I'm locking in profit, and I'm out. Like, I'm going to just get out. Like, here's my profit. It didn't hit my target. Could I be right? Maybe. Okay, well, I'll take another 25% here. So I'm profit taking now. It starts running up, and you still made, 100, 150% on this last 25%. It's still a great trade. Say it's a $10 trade, we'll just say. On the last 250, you still made 100%. You still made 50% of your initial trade. Think about that. So don't be scared to take profits. I took, $2.50 here. I took another, say this is a 75% return right here, off 250, and this is, 100% return on 250. So at the end of the day, I'm 100+% return on a trade. So don't be scared to profit take, guys. Scalp a little here and there, but learn your markets. I hope this helped you guys, man. I'll be doing some technical analysis videos on how you can actually capture trend reversals and get into a trade, just a little bit more than based on naked price action, and it helps you out a little bit, knowing when to get in and when to get out and what to look for. Once again, this is your boy Cali. I appreciate the support that you guys are giving us and all the information that you guys talk about. We do look at the coins you throw out there. Sometimes we're quiet. Been working on the website, some tutorial videos be coming out shortly. So just want to say thank you very much, guys, for your support.